Good morning, traders. I don't see Ryan around. Not sure if he's online. So I'm going.
Good morning, everybody.
Oh, there you are.
Yeah, I just had a bit of an issue with my machine. I had to reboot it. Lost the mouse input.
Good morning, everybody.
No worries. Who's here? Morning, Kay. Yeah, sorry about that. Just I say lost mouse input, so I had to swap mouses quickly and then reboot. Anyway, back in the saddle. Let's get stuck into it. Quite a bit to talk about today. Some interesting comments from around the globe, central banks and whatnot. Going to start with dollar yuan, which was the big news again overnight. The PBOC once again fixed the rate below 6.9, as we were speaking about yesterday. They fixed it at 6.8906. This was again as it had been trading above 6.90. So again, they're drawing a bit of a line in letting the yuan weaken above that 90 mark. We also heard a bit after the event, obviously, that traders were seeing Chinese state banks selling USDCNY. Now, when that was, we don't know whether it was this morning. Irrespective of that, when that headline came out, we actually saw it bounce there, and likewise in CNH, we saw a bounce there on that headline. So old news, probably well in the market before we got to hear of it. But once again, they're keeping that level contained around the 6.9 area. So that needs to be monitored. The fact it's still bouncing doesn't mean they don't want to allow it to weaken further, maybe up towards the 7 mark. But they're a bit concerned about the speed in which it's gone or could go. And so they're applying the brakes, should we say. We got some news out of Taiwan as well. Apparently they were taking some pot shots at Chinese drones over some disputed islands yesterday. That brought a comment from one of the state media ears, if you like, our mate Hugh Jingjing, who said that it's okay for Taiwan to shoot at normal drones that are flying over, but if they take pot shots at Chinese drones and shoot one down, that's tantamount to declaring war. Now, he is a bit outspoken on his views regarding things like that, but that's the comment that came from him. And as I say, he works for the, I think he's editor or chief editor at the Global Times, very much a mouthpiece for China. On the data front from China, we've got the PMIs, manufacturing PMIs, which came in better than expected, at 49.4 versus 49.2 expected. That was up from the prior 49, still well in contraction, but a little bit of an improvement there. I'm going to jump quickly to a bundle of ECB speakers out yesterday. We had ECB Muller saying they should discuss 75 pips hike at the September meeting as the CPI outlook failed to improve. But he will wait before making his decision. He's got an open mind. We'll wait for the discussion with other colleagues before he decides what he wants to do. ECB's, I never get this name right, Wunsch, said CPI is probably, or the rise in inflation is probably more structural than a shock. No shit Sherlock, as we like to say. And he did another no shit Sherlock comment by saying the ECB has been underestimating inflation for over a year. Well done there. Nice of them to wake up to that. ECB's Nagel said the ECB must act decisively. Okay, whatever that means. They haven't acted decisively thus far. Again, waking up to the fact. Stornoas said that they must proceed in a gradual but definitive way on rates. Sorry, a determined way on rates. So maybe not in the 75 camp. He wants to go gradually, but firmly. We'll see what that means when we get the ECB next week. Staying in the EU, and von der Leyen came out yesterday saying that the EU had filled their gas storage to around about 80% of capacity and were ahead of where they expected to be this time for those bumping up the storages. While we're on energy and gas and whatnot, there's been a few comments out from Russia this morning. They said they want to fulfill their gas supply commitments, but they can't due to sanctions. Now, that was cited by IFAX, citing a Kremlin official, apparently. So a bit of an excuse being thrown up there. Obviously, we've got this latest maintenance shutdown starting today, or is it tomorrow? I can't remember. I think it's winding down today for the next 3 days anyway. That's starting. Obviously, there's going to be worries about whether it starts up again. Gazprom did say they would reopen Nord Stream after this maintenance to the same levels it was prior, but these comments coming out may sow some seeds of doubt and some fears over that. Russia also said that the German government is doing its best to destroy all energy ties with Russia. Again, more stepping up of rhetoric there. And they shed some light on this halt of gas to France's energy firm Engie, and saying that the halt was over insufficient payments in July, and they want full payment in. They want payment in full if they are to resume supplies to that company there. Siemens repeated that they are not involved in any way with this maintenance work that's currently ongoing. So the noise around all this energy business is still going on. This could be a tense few days for markets, particularly running into the weekend over this maintenance. Will supplies come back online? Gazprom said they will, but has any of these comments changed that? We know it's a loaded gun at the moment, what Russia can do with the energy supplies. Europe's ramping up as fast as possible, building their storages, and so we'll see what happens with that this weekend, but it could present some weekend risk if there's any more negative news on that. Going over to some of the other central banks, Riksbank's Bremen said that more hikes are needed, and neither 50 or 75 pip hikes are excluded. This one I'll give to Kay to explain a bit further, but Norges Bank issued their next NOK sales memo, if you like, statement, and it was a bit of a big increase. They've gone from 1.5 billion NOK sales to 3.5 billion, which kicks off, I believe, 1st of October. But I'll, as I say, Kay, if you want to add some to that, because I know you keep a closer eye on that than I do.
Yeah, so no, it kicks off 1st of September, right? So first of all, yeah, it's always their next month plan coming out. So first of all, we've seen those high energy prices, which means that the Norwegian exporters of oil and gas, they are regularly buying Norwegian kroner to pay for their taxes, and those income are how shall I say, managed and balanced by the Norges Bank for the oil fund, and they are either buying or selling Norwegian kroner if there is an imbalance compared to what they usually hold in their books. There was already a bit of a rumor going around that the Norges Bank was a bit shy by doing 1.5 billion NOK a day to compensate for that, but the expectations for this month were perhaps a smaller increase, and actually also timing wise, the market was rather expecting them to really beef it up come October, but they are seemingly like other central banks front loading stuff. So they came up with 3.5 billion Norwegian kroner per day. That's a lot, and timing wise as well, quite a little surprise for the amount that they are throwing at it, but it's kind of logical. Anyway, it took the market a bit by surprise. Norwegian kroner weakened so far about 1.5% over the day since the early morning. Yeah, it took the market by surprise. We're on big levels in euro NOK and dollar NOK, which I will show a little later. So the expectations for September, you have to know that, like, well, 3.5 billion NOK a day is 350 million euro equivalent. In absolute terms, it might not mean a lot euro, but we have to know that the Norwegian market is a lot smaller in liquidity than the European than the euro market, of course. So it does have an impact. So that's about it for now. And well, I expect Norwegian krone to remain on the defensive now, especially that we have seen also oil prices coming lower. Today, I think one and all may have to do with end of month rebalancing. Still, we are the last day of the month, so watch out what's happening later today and tonight, once the fixings are done and dusted, because there's a few asset classes being thrown around this morning.
Cool. Thank you very much, mate.
I'll continue about it. I'll continue on those when I show.
Yeah.
Pictures.
Yeah. Cool. Right. So I'm going to hop over. Or we're going to hop over to the US because we had some Fed speakers out. Nothing hugely anything to jump on trade wise. Feds Williams said they need, or they're going to need restrictive policy for some time. He sees rates somewhat above 3.5%, but how high they may go will be dependent on the data. Bostic was out saying he sees slowing CPI. If we get slowing CPI, that may give a reason to slow rates. But the main focus for the Fed is getting inflation down and not the jobs market. And also that they must move real rates to positive territory across the curve on that one. So pretty much standard from the Fed at the moment, nothing too hawkish, nothing certainly unhawkish from those guys there. I haven't forgotten about Japan. I'm going to come on to that after we've just done a quick look at the data, because there was quite a bit out overnight and this morning. Industrial production data from Japan beat expectations, down on last month, but still a positive number. And we're seeing more and more positive numbers coming out of Japan there. They do have some forecast numbers for the months ahead. That was better on the 1 month output or outlook. The 2 month was slightly softer, but still positive. Larger retail sales was up 0.8% from -1.3 prior month on month. Retail sales year on year showing fairly strongly there as well. Kate, anything to do with the currency on that, do you think, in terms of or inflation, in terms of people, paying higher prices, leading to higher retail sales, or are these adjusted?
Yeah, I think it has to do a bit with the higher prices, or perhaps people being a bit worried about creeping up inflation and front loading some of their purchases. On the industrial production, though, I must say that most of the time their predictions are a little wet finger up in the air. But it is a fact that the industrial production that came out is a little better than what was expected. So yeah, one to keep an eye on, I would say, going forward, especially if we see, but that's going to be for the new month. If we see energy prices stabilize or come off a little bit, we might start to see perhaps a bit of impact on the Japanese yen. Wouldn't it be that Bank of Japan is, of course, keeping its foot on the easing pedal?
Yeah, I want to speak about that in a moment once I've just got these bits out of the way. So going over to back to China, as we saw those manufacturing numbers there, we also got the composite and the services index, which was off slightly but still in expansion. Then there was a bit more Japanese news down here. Construction orders year on year, 2.8% versus 15.5% prior. Again, some of these year on year numbers, I'm not too convinced about because of the pandemic skew that comes in between what was happening last year, lockdowns, and just coming out of that mess, it's tending to screw up some of these year-on-year numbers. Although positive is positive, so that's the least we should take from it. Consumer confidence there was high as well, beating expectations, up on last month. So again, more positive data coming in for Japan there. It's becoming a bit of a theme at the moment. Germany, we had some data. Import prices there still running high, a bit softer year on year, but still up near the 30% mark. France consumer spending, part of the GDP numbers out there. GDP came in pretty much in line in the revisions there from what we've seen prior. Inflation, CPI was down to 5.8% from 6.1%, with the Eurozone measure also down 6.5% from 6.8% prior. Is it peak? Is it not? Well, we've seen others have a little dip and then run back straight back higher again. German unemployment was bang on the money as far as expectations are concerned. The unemployment rate did tick up to 5.5% as expected. There's a little bit of skew in there, it's said, from displaced Ukrainians who have gone to Germany, entering the jobs market, going onto the unemployed list. So a bit of a skew coming in there. We also had Italy CPI and HRCP leaked early. That came in 9% versus 8.4 prior on the Eurozone measure, 8.4 versus 7.9% prior on the main CPI measure there. So going the other way, higher inflation. We will maybe be seeing low inflation in France, but Italy's on the up. And then we had the Eurozone number, again confirming the higher inflation, beating expectations there. Core up as well. So, you know, a lot on the cards for the ECB to discuss going into their next meeting. Right, so that's pretty much covered all the data and everything, but I want to bring in the some comments from the Bank of Japan, Nakagawa. Now, he first came out earlier this morning and he was saying the same old stuff. They need to continue easing. Simply hitting 2% CPI does not mean that it's enough and that it's going to get the Bank of Japan changing policy. But then there were a couple of comments out after that, which I may be making more of than I should be, or reading too much into it than I should be. But he said that the Bank of Japan decided to maintain its easy policy bias at the July meeting, and he hopes to discuss at the set meeting whether it should continue doing so based on the data available at the time. Now, part of me could read that and say, okay, well, that's all they're going to discuss. But why would he hope to discuss that if that's going to be standard what they're going to discuss? And then another of his comment, he came out, he said that the fate of the Bank of Japan's pandemic relief program isn't necessarily linked to a decision on whether to tweak forward guidance on monetary policy. Now, again, I may be reading too much into this, but he's talking about a tweak to forward guidance, whether it happens or not. The fact that it's in their mind of potential discussion is what I think is the important factor here. And again, as I say, that hope to discuss at the set meeting whether it should continue easing. Kate, am I having one of my moments of reading too much into something, or
well, first of all,
is there something there?
It's a she. Juku Nakagawa is a lady.
Is a lady.
Yeah, we don't have the habit of seeing ladies on the Bank of Japan government council, that's for sure. But you know, yeah, she's hinting at wanting to discuss some of the policy guidance, the wording in the ultra dovish guidance. So perhaps she wants to discuss about how they may tweak it, saying that if the numbers persist, we are going to look at making changes. It may be a bit of a lengthy process. We are August. We're still September nearly. We're still a ways away from Kuroda's end of January as a Bank of Japan governor. but is he trying to prepare the terrain for what's going to happen once he throws in the towel? I'd like to just add that Bank of Japan also, where is it? To increase the upper limit on consecutive day purchases of cheapest to deliver issues to 75 business days from current 50 days. And that has to do with a fixed rate purchase operation for the 356th, I don't know what it is, 10-year JGB to be conducted for consecutive days through September the 20th. So on the one hand, we've got comments that she would like to discuss a bit of the forward guidance, but it could take a while before that forward guidance is then effectively changed, at least one meeting, I'd say, if they just discuss it now. And on the other hand, they take it away again, saying that they will continue to press on the pedal for buying JGB. So no, I think you're right to pay attention to it, but it's far from a done thing right here and now, right?
Yeah. And yeah, I mean, it's important to know that even that language she's used, it may sound really subtle and nothing of a big deal if you compare if it was the ECB issuing such language. But for the Bank of Japan, who have been sitting in this mode for forever, and all we've heard from them is that they're going to stay on this path. Even the smallest hint of a potential change, even if it's a couple of words in the new statements or the language or whatever, can be a very big deal for the yen. I mean, we had comments earlier this year when they talked about an exit in a roundabout way, that at some point in time they would be at the need for a discussion on an exit. Didn't hint at anything coming, but just that language and the fact that it was in their mind caused a bit of a reaction. So it could well be that in the grand scheme of things, what she wants to talk about in changes of language and forward guidance may not be huge in terms of actual change of policy. It may be something that comes 8 months down the line, but the fact that they're talking about it could be the big deal. So that's going to put a bit of extra spice onto the next BOJ meeting, in my opinion. Anyway, that's what I wanted to watch or point out from those comments there. Kay, you got any other items that on your radar or what's your wires this morning?
Not really of what happened, but I'm curious about this upcoming ADP number today, because the ADP said that they changed their methodology of calculating the ADP numbers, which should be closer to reality because they are including more data and more details into what they compared to what they were producing before. So the market may pay a bit more attention to what the ADP number may come out later on today. We haven't got a clue whether it's closer to the reality or not, but at least the algos might be picking up on it. And then we're still in end of month territory, so be careful with everything you do. It's everything can change on a dime today. There are a few themes which we will have a look at, but yeah, be careful what you do today. So, but I'm quite curious about this ADP number later today.
Yeah, that's back on at the normal time of 12:15 GMT. As you can see there, they've got 288k expected. The expectations for the NFP currently around a 300k mark. So we'll see if they're still shooting arrows in the dark on that one. Speaking of the NFP, a good time to announce that the NFP competition is open. This is a regular competition that we run because we're that good to you guys and girls. We give you so many opportunities to get into our chat room and on the platform. As you know, you can do so via the Traders Funding Program, and we also run a competition where 3 lucky people, if you pick the number or come closest to the number, you can win a free month on the platform there. So I've dropped the link in the chat for you there. You can put your guesses in the comments of that post there in Discus, or look for the tweet. I might as well throw that up as well in a minute. Look for the tweet. You can put your replies in there, the tweet of that post, as I say. Get closest to the number, you get the glory of bragging rights of being the NFP expert, and you get free access for a month to our platform. And if you are a subscriber, we add that onto your current subscription as well. So even customers can play too. So that's something there for you if you want to have a crack at that. Obviously, you won't beat me because I'm just superior to everyone when it comes to this NFP competition, and I'm going to get the closest. So no. Anyway, have a crack at that while we crack on looking at the prices. Kay, do you want to do a little, do your usual?
I've posted the Twitter link, by the way, in the chat. So
oh, lovely. Thanks, mate.
You can enter the competition there. And don't believe what Ryan said. I am usually the one who knows the number, actually. All right, let me.
Yeah, what you can do is find Kay's number and go a couple either side of it, so you can block him in. we like to play this strategically.
That's exactly what one of our members is doing, isn't it, Simon?
Yeah. Or wait for Blake, because he's never in light years of the number. So wait for his number and then block him out as well. Anyway, Kay, I'll give you control of the cockpit.
Yeah. Okay, here we go. First of all, a couple of rates here. This one has been a bit of a feature of late, and it has, first of all, worked in the one way that we've seen at the end of this month. Euro doing better at times, especially in the European mornings on the crosses. So this is the German and the US 2-year differentials. It does look to me that if you look at those these price actions in the past, it does look to me that this market is keeping a close eye on this 230 to 228 pp's interest rate differentials in the short term. So I reckon it's worth keeping an eye on it. Likely post tonight's or later today's fixing, and at the start of the new month. I am keeping an eye on it to see whether this zone is going to cap and we are going to widen the differentials again, or whether we stay here. It could be we stay here or even push a little higher into the ECB next week. We'll come back to the ECB later on. But with all the noise and all the hawks out, my personal view on that is that they will have to raise 75 BPs, or the market may be very, very disappointed. Moving over, the one that I really wanted to have a look at, close look at this morning is this is the Norwegian kroner, right? So we had this we had this move up already when the oil started to come off, and risk was starting to come off as well, because the Scandinavian currencies are also a bit risk related. But then when we look at this morning's move, I'm going to show you, this is the surprise move of the Norges Bank when they came out with their data that they were going to sell 3.5 billion Norwegian kroner per day. So Euro NOK shot up like a full percent in the space of 15-20 minutes, and we find the same move back on the dollar Norway this morning. There was a decent resistance around here at 9.85 dollar Norway, and it absolutely shot through straight away. 990s was a bit of a level as well. Didn't even look at it, and we are already trading higher. This one, unless we get a rally back in Brent, this one is looking to me that like we're going to see deep buyers starting the September month. Whether it's dollar NOK, whether it's euro NOK, whether it's another currency versus NOK, which may be a bit stronger. Or has less uncertainty than the dollar into the NFP or the euro into ECB, but I haven't the impression that euro is going to be sold on rallies for now. going the usual ones. Dollar yen broke up after Powell, and then confirmed by our friend Kuroda. But for the time being, we are like hovering in the 138 zone. We still have this important 139. 40-50 area to reckon with, but it's one to keep a very close eye on, and I think again through the upcoming NFPs, and we may have a little bit of activity on the month end as well. We have seen the past few sessions. I don't know whether today will be the cherry on the pie. But we have seen yen strengthen just a tad in the morning hours versus some currencies, and then lose it again over the 4 p.m. London fixing. So keep an eye on that one. The rest is still pretty much from a longer term perspective, still watching the 99, as I've been already talking about for weeks now. 99, the figure, is my main area for the euro dollar. Very important going into the close of the week with ECB expectations starting to be ramped up. It's going to be very important what happens in the early parts of September. Top side to close, the nearest buy is around 10080, 10110 as a level. British pound, yeah, it's getting hammered. There's no other word for it. Even the rumors, or whether it be rumors on news that the UK will be looking close at starting or restarting or commissioning nuclear power plants, has failed to support the sterling right now. There could be parts of end of month again. Again, I can't stress enough when I'm saying that end of month they can really distort markets. So I'd rather look at the cable coming out of the fixings later this afternoon, tonight, to start the week tomorrow, and see what happens towards the end of the week with the cable. But it's looking weak, and the market has very little faith in the Bank of England handling the situation right now, including myself. I think Bailey failed again to talk a bit strong on sterling, or whatever he feels or thinks. Instead, talking about reserves and the difficulties to get rid of them over the weekend in Jackson Hole, in the market just went like, well, I mean, you're a waste of space, so let's sell a few more of sterling. So we're back at the lows here. Longer term, we could be heading, if both sterling remain weak and the dollar keeps a stronger bias, could be heading into the 114s. Why not? But I'll leave that to the appreciation right now. I am keeping a very close eye though on this 117.60. If we ever retake it and keep it, we might be in for a bit of a correction there. For the rest, yeah, I want to keep an eye on this dollar CNH. This dollar CNH was a bit bizarre, because we had the fixing. We had the Chinese data, and that's why I'm putting up the 5 minutes here just for a little. We had the Chinese data up and down, and then all of a sudden we came off those 300 points. And I reckon the update that we had not too long ago about the onshore banks selling dollar CNY, I think we finally have the explanation of this move, because it came a little bit out of the blue. Well after the publication of the numbers, well after the publication of the fixing. So I think it has more to do with those onshore banks, and now we are gradually starting to creep up again. At least we are holding the 690 line. There again, I'm looking for this zone here to hold and a push higher, but I've been talking already about that. Interesting one here was yesterday. As you know, I'm looking at this 2030, 2040 zone. We had a push higher into European fixings again, and then later on in the day where the Mexican peso went a bit risk off together with the equity markets and the oil markets, the commodity markets. But the global picture is still the same for me, so I'm not going to change much. We need to have a look at gold and silver, right? They're both looking weak right now, and we couldn't hold the 17, 22, 28 zone on gold, and gold is now back down to 17.10. I don't know, but I'm not excluding that not only in FX or bonds and equities we do have rebalance and end of month rebalancing, but we have seen past months metals as well rebalance. So or there has been rebalancing needs. And again, being the last day of the month today, is it dollar strength or is it just those rebalancings as well? We are seeing currently, if you look at the dollar interest rates, the yields are pushing higher, and we know that there's some equity bond rebalancing to be done as well. I really will reserve my verdict on metals until today's open. And if we look at silver, this is a quite ugly picture, because we are moving below the prior low that we printed in July, and we are now trading actually below 18 bucks. If you look at it from a longer term perspective, there isn't really much to see before $17 here. But again, I'll be having a very close look at this one on the close today. It's possible that we go there. It is possible that yields are pushing higher, because we can't forget that from tomorrow onwards, QT in the US will double. But I still want to see how the end of the month is playing out here. We could be in for quite a good opportunity if we see more weakness coming in there. And Ryan, I'm going to leave it here for today.
Yep, thank you very much, sir. Right, let's share the old screen. Where's the thing gone? So a couple of things I wanted to look at. As most of you probably know, we've had a fairly sizable move in oil, near enough down 10 bucks over the last day or two. That's causing a bit of a lift or double wind for dollar CAD. The news really about oil is the potential for Iran suppliers to come back in if there's a nuclear deal. There was also a bit on what the trouble that was happening in Iraq. Could it affect oil supply? It hasn't put a dent in that, the news report. So, plus we're getting this global growth issue cropping up again, maybe demand dropping, central banks obviously fighting against inflation and possible recession. So that has peaked as well. I think we've got the OPEC meeting up and coming as well at some point. 5th of September, I think it is, or the OPEC Plus meeting and the OPEC meeting not long after that. So yeah, big dive in oil prices there. We have got a roll off of contract months going on there as well. So potentially some skew as those roll over from October into November. That expires today, at least in Brent crude. Not sure when the US goes off in that one, WTI. But anyway, taking it across to dollar CAD, and we've got a potential break happening here. My big zone, the 129, 131. We had the move up to 130.80. We've had a couple of attempts. We had the move up last week, got to the 60s. Then we had a move up into the 70s. Then we had the breakthrough 130.80. Flip-flopped about a bit, then we found support, had a little dip under, back above again today. Now we've broken out the top also of this wide band that, as I say, I've had in my chart for many months. So potential break going on here. I'm not overly keen in the break. with the month-end stuff going on, with the oil stuff going on, also this dollar bid that's remaining in place after power and whatnot. I don't know how much is affecting what in this one, so I'm not really inclined to look for trying to break trade. It is looking well bid, I will give it that. If we do move up, then I'll be looking again at my rough channel top that we've got going on here, that we've been sitting in again for many months. If we get another move above 32 and it holds, then potentially we have got a real big break on. And let's stick that on the weekly, and you can see what that means. If we do get a big move up, we're heading up towards the 50 fib of the 2020 move down, which comes in around the 133s. So we've got the potential for a big break. I'm not 100% sold on it right now, but I'll let the price action guide me. If we start building a decent base in this 130.80, 131 area, we've got all the makings of another shift higher. Another one that's looking a bit breaky is euro sterling. We've had a move up to the 86 handle, and this old fib, we have had a little taken a few pips above it, but can't sustain a break at the moment. Again, one of my areas that I'm looking at potentially for a break long, to get in some longs, but again, I remain unconvinced right now about what's going on in this one. Is it a real break? Is it just part and parcel of what we've heard from the ECB? You know, if the ECB don't conform to these raised expectations for the market, that's going to hit the euro. So again, I'm still a little bit uncertain whether to try going for a potential break of this here. We're not seemingly doing it in any significant way. We can't get above 86. We can't hold above 86 when we do. So that sounds the warning bells still for that one. I am getting a bit twitchy over the pound. Even though there's no real reason to buy it, I don't see any extra or additional reasons why it should be sold all this way down here. Not that I'm going to fight it just yet, but I'm getting a little bit of an itchy finger to maybe start scaling in some longs. I might do some into today, just put a little tiny position on just to see if it's a month inflows, and once those are passed, to see what happens there. I won't put a lot into it. I won't give it a lot of room. But as I say, I'm just getting an itch that this is getting hit harder than necessary versus other currencies that are in equally bad situations. And you know, when I start to get an itch, sometimes I just need to scratch it. Aussie dollar still really mooching around this 68, 40, 50 area that's been going on since we had the move off of those lows down in the 66s. So it's becoming a bit significant here. You know, 40 is really the line in the sand for this one. I know a few people in the room are still bullish this one, and I would be bullish as well. But also, again, just like I've been talking about with dollar CAD, I don't know if this is the right time to be chasing this one higher. It seems that it can't sustain its gains, and it keeps coming back to this 68 to 40, 50 area, which in price action terms looks a bit risky. I'm not sure I'd go with a break lower, though that's something I might look at just for a small trade, just to try a break of 40, see if it can maybe have some legs down to at least 68, the figure down there. That's pretty much what I'm looking at. I'm still in and out of my office this week, just last minute things with the kids and whatnot. So I'm not 100% focused on trading right now. So I'll be honest with you on that. But there's still bits and pieces that might catch my eye, should we say. But I'll keep my risk really low if I'm not going to be at my desk when I'm trading. So if you guys have got anything else in there, dollar CAD, yeah, just covered that one, Gavin. And any other questions in there, please chuck them in the chat. Otherwise, as always, thank you very much for coming to the Flow Show. Keep an eye on that ADP, as Kay mentions. The market hasn't had that for a few months now, and it's going to get back into using that as a litmus test for the NFP. So we'll see what that see what that comes out as later on. Otherwise, I shall see you bright and breezy tomorrow. Trade safe, be well. Thank you, Kay, and we shall see you all tomorrow.
Have a great last day of the month, everybody.